Initiative here at the GDP Center. Over the past 22 years, Chinese development finance institutions, commercial banks, government entities, companies, and other lenders have provided an estimated 1,243 loans amounting to $170 billion to 49 African governments and 7 regional institutions. These loans have financed considerable infrastructure, energy, and development projects throughout the continent. But since 2016, annual financing has been steadily declining from a peak of 28 billion to just 994 million in 2022. Chinese loans to Africa appear to have entered a new stage of lending, wherein smaller projects, more targeted projects, have replaced the mega infrastructure projects that were so typical of previous years. What trends are characterizing Chinese loans to Africa in this new era? Which countries and sectors have received financing in recent years, and what factors are likely to shape Chinese lending to Africa in the years to come? A new update to the Chinese Loans to Africa database, managed by the GDP Center, provides insights and analysis on the state of Chinese lending to Africa in this new era. Today, we're joined by our lead researcher on Chinese loans to Africa, as well as our center's director, who will provide commentary and contextualize these findings. They are Oyen Tyrella Moses, data analyst and database manager at the Global China Initiative here at the GDP Center, and Kevin Gallagher, the director of the Boston University GDP Center. To begin, Tyrella will present some key findings, followed by a database demonstration. After that, we'll have a discussion session, followed by a Q&A session. And before turning it over to the speaker, I want to mention that this webinar is being live streamed on YouTube, so a recording will be immediately accessible. Please use the Q&A box located in your Zoom menu to ask your questions. And when you do so, please also give your name and affiliation. But please feel free to enter your questions at any time during the presentation or the discussion afterwards. Thank you. And now over to you, Tyrella.
Thank you, Rebecca. Just give me a moment here while I share my screen to kick off the presentation. And I hope everyone can see what I'm looking at as I make it into full screen here. Okay, great. So let's kick off. So I'm going to walk you through our findings on this new Chinese Loans to Africa database update. And just to give you some background, the CLA database is an interactive data project that tracks loan commitments from Chinese development finance institutions, commercial banks, government entities, and companies to African governments and state-owned enterprises and regional institutions. We collect the data that we have in the database from publicly available statistics, from official government documents from both the African and Chinese side, as well as contractor websites. And in some cases, we do receive updates from fieldwork and interviews. We also look to media sources to kind of guide us to seeking out new loans, and then make sure that we confirm the existence of those loans with official government documents to the extent that we can. So let's take a zoom out here and look into Chinese loans to Africa from 2000 to 2022. So what we have found, as Rebecca also already mentioned, is that from 2000 to 2022, we estimate that 39 Chinese lenders have signed 1,243 loan agreements with 49 African governments and 7 regional institutions. This amount, which amounted to $170 billion in financing, is 64% of what the World Bank supplied to African governments during the same time period, and is almost 5 times what the African Development Bank supplied to African governments during that same time period as well. In terms of the breakdown of borrowers and lenders, we see that 69% of the total loan amount were to the top 10 African borrowers, Some of those include Angola, Zambia, Egypt, Ethiopia, and Nigeria. And then 79% of the loan amount were supplied by China Development Bank and the Export-Import Bank of China. I do want to note that the Export-Import Bank of China did provide 53% of the loans, so they are the majority lender here in Africa. In terms of regional distribution, we do see that most of this lending has gone to Southern Africa and East Africa. This is mainly because many of the top 10 borrowers are in these two regions. And then other regions have received less total financing in general when you look at this map. And this kind of regional breakdown we base on the African Union breakdown of different regions. So it's quite telling as to where this financing has really gone over the years. In terms of sectors, the majority or the sector that has received the most amount of financing is the energy sector. After that is the transportation sector, and then the ICT sector is the third, followed by financial services, industry, trade, and services. And this other category, which includes sectors such as education, the environment, and water, sanitation, and waste. So that was, an overview of the overall amount of Chinese loans to Africa. For the 2021 and 2022 years, I think they're quite telling about some of the trends we currently see, but also can expect in the future. And what we found is that we estimate that Chinese lenders and African governments signed $2.2 billion worth of loans in these 2 years. In 2021, they signed 1.22 billion, and in 2022, 994.48 million. And these 2 years really signify the first time where we've seen our estimates be below 2 billion in 2 consecutive years since the early 2000s. This was overall 16 loan agreements for 8 different countries and 7 sectors. And in this graph here, you see the countries that borrowed this financing from China. So these include Senegal, Benin, Ivory Coast, Angola, Uganda, Ghana, Rwanda, and the DRC. As shown on this graph, the Export-Import Bank of China did provide the majority of these loans, followed by a category, which we just say other lender here, but it's just general Chinese government. And then several contractors also contributed financing to several countries. We did see one loan from the China Development Bank, which compared to previous years is quite interesting for us. This borrower composition is also notable because there were 3 borrowers that stood out to us from the West African region. Ivory Coast, Senegal, and Benin. These 3 borrowers have historically borrowed less from China, and they also happen to be in the West African region, which has, as a whole, borrowed less from China when compared to Southern and Eastern Africa. And so it really shows a diversification of African borrowers that has occurred during these 2 years, 2021 and 2022. Next, when we look into the sector breakdown for 2021 and 2022, we notice that there are some overlapping sectors, such as the transportation and ICT sector, when you compare the breakdown to overall amounts. Notably, there was no financing in terms of these loans that we found for the energy sector in these 2 years. This is likely due to the fact that since China has announced the Green BRI and a move away from financing coal projects overseas, there may be, a reconsideration about what types of energy projects to finance in the future. And so we're just seeing a temporary pause. However, we did see some interesting new sectors to us that stand out a little bit more than they have in previous years, such as the environment sector, education, defense, and then in this other category, we have some loans that are specifically for water and sanitation. So now that I've given you an overview of the trends, we'd like to explain kind of what we currently see based on looking at overall trends from the past, what we see in the present, and how these two trends in combination could really tell us about the future of Chinese loans to Africa. So first, we took a look at average loan amounts over the years and then the count of loans. And what we found that is in the pre-pandemic period from 2017 to 2019 to the pandemic years from 2020 to 2022, loan averages have decreased by 37%, and loan count went from 184 loans to just 32 loans. And so this is definitely a significant change that we've seen during the pandemic years. We've also seen, as I mentioned before, certain projects that are in sectors that mirror previous sectors from the past, such as the ICT sector, but also projects that are in some interesting sectors that have not been as prominent before. And I think I just want to mention one of those projects, which is this ecosystem resilience in the Furlough region project in Senegal, where the Chinese government really financed a project that was meant to address desertification and excessive farming in a region in order to bring water resources to improve agriculture, the ecosystem, and also socioeconomic activity. We also looked at trends to top 10 borrowers. And as you can see from this graph here, these trends really showed a relatively flat trend in borrowing in 2021 and 2022. As you maybe have followed the news and different government reports, some of these lenders or some of these borrowers were involved in debt negotiations with China through the G20 Common Framework. Some of these African countries were also involved in the debt service suspension initiative. And so we do kind of draw some connections between the state of debt challenges within these top 10 borrowers and the potential for taking on new loans, and then for China to actually lend to these countries. Overall, by the end of 2021, 58% of African countries were also in debt distress or in high risk of debt distress, according to African Development Bank estimates. And so many of them, in addition to going to other lenders for kind of relief, they did seek out China for relief as well, as shown in different reports from the Rhodium Group. We also noticed many failed negotiations and loan cancellations for various reasons. These reasons include, greening the BRI and moving away from fossil fuel heavy projects, but also disagreement on loan terms, and then a concern about adding to different debt burdens in certain countries. So looking at all these factors, we think that these current low levels cannot be explained by just the pandemic alone, but there are a mixture of other push and pull factors that are taking place here. As I mentioned, debt issues for some African countries that were heightened and worsened by the pandemic, as well as certain domestic priorities in China that really positioned certain major lenders such as CDB and Checksum to focus on domestic lending. And then we also have seen a shift in China's global priorities to the small and or beautiful approach, which we covered in some of our previous work at the GDP Center, and then a focus on greening the Belt and Road Initiative. In terms of regional priorities, we've seen a lot of policy framing from China come out to talk about a new approach to China-Africa cooperation that is high quality. And so there has been a higher emphasis on trade, on agriculture, and even diplomatic engagement that we continue to see, even though loan lending volumes have occurred. So what does this mean for the future of Chinese loans to Africa? We expect less large-scale loans, more loans under 50 million that fit under this small and or beautiful approach, and then loans for more beneficial social and environmental projects that really also fit under this attempt to make sure that projects have economic feasibility or having better impact on the livelihoods of recipient countries as well. So with that being said, that concludes my presentation, but I also wanted to thank many of the individuals that have been a part of this process in putting together the Chinese Loans to Africa database. This includes our Global China Initiative predoctoral fellow, Jizhang Huang, as well as multiple research assistants that were a part of this process for the 2022 to 2023 research cycle. So with that, I will pause here and move over to showing us the data demo of our interactive. Just give me one moment while I pull that up. And I hope everyone's able to see it now. So this is the Chinese Loans to Africa database, which I'm very excited to show you all. This is a great data interactive that gives you an overview of the different amounts and loan counts, as well as borrowers, lenders, and sectors of our data. When you come to this URL, you will be met with this introductory page that gives a background about the CLA database. You can scroll down, but you can also just click into explore the data. And you will see a map here of the African continent with various bar graphs. Each of these bar graphs and their colors are associated with different sectors here that have colors to show us where this lending has gone to. And so you can hover over this graph to give you a general idea of energy lending, for example, over the course of the different years that Chinese lenders have provided to African governments. When you go to this graph on the right here, it will show you the loan amount in the years, and you can hover over each year and it will give you another breakdown by sectors as well. If you scroll down, the different projects are listed out by country under each sector. So for example, here you have the energy sector, and you can click into Angola and look at the various projects that received different types of financing, and also identify the lender as well. If we go up to the actual map, you can also click into this map to give you general aggregates. And when you click on the map and click a specific country, as I did here with Angola, everything below does adjust. So you can easily just scroll down and get the aggregates that you need. You can do that for multiple countries. For example, if I click Zambia here, it will show me the aggregates for both Angola and Zambia. You can look at this view both by amount committed as well as number of loans, and everything adjusts below here to show you the different counts of loans across certain sectors. I do want to also show you this lender view here. Let me just reset this map. And we have broken up our lenders according to different categories. And so you could click into development finance institutions, and it'll just show you loans from Checksum and CDB, for example. And you can do the same for other borrowers, such as state-owned commercial banks and Chinese contractors as well. I do want to mention this icon to my right here of regional loans. And these are loans to African regional institutions. So if I scroll down here and I click into this category regional, you'll be able to see which regional institutions received this finance, as well as the project that the finance was for. There is an info here about what this icon means, so you can also look into that to get more of an understanding of what we mean by regional loans. So I'll reset the map, and the last thing I want to show you is this About Data Download page, which gives you background about our data. It gives you an opportunity to look into the policy brief that contextualizes all this data and gives you some of the trends I explained today in more detail. And you can also go to this type in box here and start to type in your information to receive a download link that we send to you to access the data in Excel format. So with that, I want to thank you all for indulging me here for some minutes, and I will hand it over to Becky, and excited to start the discussion.
Well, thank you so much, Tyrella, for that thorough explanation of trends and data and the demonstration, particularly of the interactive database. As we move into the discussion period, I want to remind all the participants to please feel free to contribute your own questions to the discussion. Simply click on the Q&A button at the bottom of your screen and type in your question to be included in the discussion. And when you do so, please include your name and your affiliation so our panelists know who they're answering. Thank you so much. I'd like to start the discussion section by directing the first question to Tyrella, and that is, could you please provide us with some more background about the database itself? If you wouldn't mind explaining the scope and the methodology of the GDP Center databases and how this particular database may be similar or different to some of the other databases that visitors might find on our website. Thank you.
Thank you. So in terms of the methodology of our databases in general, we do have a two kind of step approach where we first look at media sources that we collect either manually or through a web scrape. And these provide kind of investigative leads for each entry that we have in our databases. And then we go through manual collection where we look at official websites of African governments in this case, and official websites of Chinese governments as well. So when I say official websites of African governments, I may mean Ministry of Finance, debt management offices. And then when I refer to official websites of Chinese governments, this may mean embassy websites as well as Ministry of Commerce websites. We also look at contractor websites that where they may report on a specific project and mention the loan amount for the project. And so we really take this two-prong approach for most of our databases. I will say that for the CLA database, we depend a lot on manual collection, given that many African countries relatively have more transparency, given that they have to report certain figures to multilateral institutions. In terms of the scope, we do look at loan commitments, as I mentioned before, but these loan commitments are sovereign loan commitments, meaning that recipients are public majority-owned entities or entities with a sovereign guarantee. And so that means, this is mostly just a depiction of government borrowing, and it is not a depiction of debt because we do not track default and things like repayment. Loans are also within the CLA database, come from various lenders. So we have loans from development finance institutions, state-owned commercial banks, and companies, which this differs from other databases, which just focus on CDB and checksum. But we still make sure that we're comparing our data with the World Bank, and this is done easily through our sectors, which are derived from World Bank sectors, which makes that very easy to then compare and contrast.
Thank you so much for that. My next question is for both of you, and it's about how Chinese lending is contextualized among other development lending sources in the continent. The graph you showed comparing Chinese lending with World Bank lending and African Development Bank lending is really quite interesting. In fact, it echoes some of the findings that we found on the global scale in the China's Overseas Development Finance database, which is global in scope. We see that CDB and checksum account for 83% of World Bank lending on a global level, and that countries tend to go to the different lenders for different reasons. They tend to go to the World Bank for what we might call soft infrastructure lending, for institutional capacity development, and for policy lending. and they might go to China instead for what might be known as hard infrastructure, transportation, power, etc. Are you seeing similar trends in these sectoral breakdowns in different years? That appears to be shifting somewhat on the sector basis. And not on, so I'd like to ask Tyrella to go into depth a little more about this sector shift. And I'd like to ask Kevin to go into some detail, give us some context with World Bank lending and what do you see behind this shift in borrowing from African countries shifting away from borrowing from China and towards borrowing from the World Bank in greater and greater numbers. Thank you.
In looking at aggregate amounts, yes, I would say there is a similar trend in that African governments on the whole tend to go to the World Bank for more soft infrastructure projects and tend to go to China for more hard infrastructure projects. And so in the World Bank case, yes, there are still loans that may be for infrastructure sectors such as energy and transmission and distribution, projects that receive loans, as well as rural roads construction. But at the same time, the vast majority of what the World Bank is lending to African governments is for different types of technical assistance for central governments, as well as lending for economic growth programs and poverty reduction programs, in addition to financing for health, education, and agriculture that really just outpaces financing to other sectors in Africa.
Yeah, let me piggyback on, can folks hear me? Now, let me piggyback on what Tyrella said. First of all, congratulations to the team and all the research assistants for another great issue of the database. One of the things that's interesting, a recent article published in World Development by other researchers that shows that when China provides infrastructure finance, there's a correlation with World Bank following with infrastructure finance. So that's a interesting positive development of Chinese finance, is that it appears to crowd in other hard infrastructure where it otherwise wouldn't have happened. But why does that graph sort of go off the charts for the World Bank? To its credit, the World Bank really stepped up during COVID. But unfortunately, we're not going to see that level return over time. What they did was draw on some buffers to sort of be there for the COVID crisis and move in quickly. In other work here at the center, we're pushing hard, as many people are around the world, to get a capital increase at the World Bank in order to get more adequate size for the World Bank to be able to lend. But that was a surge, a really good surge that countries really needed during the COVID crisis.
Thank you so much to both of you for that. I have a quick follow-up question to each of you regarding your answers on that. Tyrella, one of the really interesting factors that shows up in the slides you shared is a shift towards smaller economies, away from the larger, not just the larger borrowers, but the larger economies in the region. And we see a similar shift in that same approach in our Chinese loans to Latin American Caribbean database. And so this is a trend that we see echoed in multiple regions. And I wonder if you could comment on that some, and whether you see that as being related to a change in the pull factors that the push and pull factors that you mentioned. As China prefers smaller loans, those loans may go further, perhaps, in smaller economies. Or do you think that perhaps those smaller economies are more likely to have loans at that scale ready to apply for, like projects prepared at that scale that might fit better? I wonder if you're seeing any trends about that, if you could discuss that in any more detail. And Kevin, I wonder if you could please follow up, give us some more detail about where you see how you see the World Bank evolution stepping in to potentially fill some of these infrastructure gaps. You've mentioned the need for capital increase at the World Bank and other multilaterals. Whether you see a sectoral shift as well as being particularly part of that process, and you see a possibility of other actors stepping in to help provide high quality, much needed hard infrastructure lending. So I'll pass it to Tyrella for her follow-up response first, and then Kevin. Thank you.
Yes, so as I noted before, it was quite interesting to see the diversification of borrowers. And what we notice is that, at least with West Africa, it wasn't necessarily included in the discussions on which regions would be officially a part of the Belt and Road Initiative at the beginning, when the Belt and Road Initiative was initially announced. This did not exclude other countries from receiving financing under the BRI, but there was a higher focus on financing to East African countries. And so we see financing peaked to East African countries in 2013, and then in 2018, there's lots of financing that starts going to West African countries, particularly Nigeria and Ghana. In recent years, I think what is most interesting is that there may be several reasons for this focus on West Africa, one being that FOCAC in 2021 was in Senegal. And so Senegal is the country we see that received the highest amount of financing, but those projects were also had quite a expected social and beneficial impact that we saw. We also saw Senegal ask for co-financing from CDB and a French development bank for a water sanitation project. And some of these other projects that Senegal asked for were, ICT, which is more maybe soft infrastructure, digital connectivity, as well as financing for an environment project. So really, those types of projects align with China's this talk of a small is beautiful approach. I think there's still some time that we may need to look at, years coming up to see if this diversification of borrowers continues. But I think it definitely is an opportunity for China to look to new borrowers and also increase the amount of benefits they can have with different loans by looking into supporting newer sectors that are more manageable from an economic feasibility standpoint.
So to answer your question about the MDBs, MDBs had largely abandoned hard infrastructure around the turn of the century in favor of more micro interventions on health, very important things like health, education, and human capital formation. But in the meantime, we have just major infrastructure gaps. The high-level commission, independent commission on climate finance estimates that we need to mobilize upwards of $2.4 trillion a year on an annual basis in between now and 2030 to fill those infrastructure gaps and to do it in a way that helps us meet our sustainable development goals and our climate needs. So China, as you can see in our database here, especially in Africa, they really focused on energy and infrastructure as the core and helped countries start to fill those gaps where otherwise wasn't there for the MDBs. So the surge in Chinese lending around the world has triggered, like I said, some positive movement in terms of the MDBs and funding more infrastructure. But now there's just a call from all corners that these MDBs, A, need to be bigger, and B, they need to be better in terms of what they're financing in terms of green and inclusive infrastructure across the world. So on the global policy agenda right now, there's two things with respect to the MDBs. Number one, and the most important one, as I said before, is a cumulative capital increase across all of the multilateral development banks. And number two, the G20 put together an independent panel of experts on the capital adequacy frameworks of multilateral development banks to examine the extent to which they could be stretching their balance sheets without impacting their AAA credit ratings. And they found that there are many, many things that the banks can do to stretch and optimize their current balance sheets in order to stretch. We've already seen the World Bank earlier this year implement some of those recommendations. They dropped the equity to loan ratio to 19%, and that'll squeeze out about $5 billion a year over the next few years. So again, those kind of tinkers are important, but they're nowhere near the stepwise increase in capital that we need across the MDBs urgently in order to meet our goals and to avoid the catastrophic cost of inaction.
Thank you to you both. Questions are beginning to arrive in the Q&A box. I'm seeing them and adding them to my queue here to answer after this small discussion period. But I want to repeat the call. If you have questions that you'd like to add to the discussion, be fearless, add your questions to the Q&A box and include your name and affiliation when you do so, please. Another question for both of you. Tyrella, you mentioned several factors that could help explain this decline in overall Chinese lending to Africa. That decline is seen in other regions, like I mentioned in the China LAC region as well. We're seeing a similar decline, although less so in Asia when we look at the global picture through our CODF, China's Overseas Development Finance database. There's several factors that you mentioned, including African debt levels, China's domestic economy, and China's pivot towards new goals in its overseas engagement. I'd love it if you could talk a little more about those three factors and see which ones you think are the most important right now, or perhaps in different contexts within the African continent, different ones are more important. And Kevin, if you could please talk some about the debt levels and how you think that might be impacting this situation. Thank you.
Yes, so I know you asked about, which factors are kind of the most important, at least from the China side, but I really think it's a combination of these different factors that are really interacting with one another. So on the China domestic side, we have seen that during the pandemic period, there were different domestic kind of challenges that were ongoing with local government revenue shortfalls, as well as issues in the real estate market. And so there have been calls for more liquidity in China to address some of these domestic economic challenges. From what we have seen, at least from just reports here and there from the main development finance institutions, they're really in a position to extend this type of liquidity for domestic financing programs. And some of them have done so. In terms of China's overseas projection and this small and or beautiful approach, we have seen more of a discussion of what this means. Small, from what we've seen, is discussion of projects that are need loans for a value under 50 million, or even large-scale projects, but that are financed by multiple financiers that take a small portion of the project. In terms of beautiful, that refers to economic feasibility, beneficial impact on the environment, as well as potentially political significance. And so there's been more of a policy framing around this, and even some of the lenders have mentioned this, such as CDB, when they provided a $14.74 million loan to the co-finance project, which I mentioned earlier in Senegal. They specifically mentioned in their report that this is a small or beautiful project that they felt would have impact on livelihoods. So there seems to be a conscientiousness about this among lenders as well. It's not just policy framing from the central government.
Yeah, the GDP Center is involved in a collaborative project with the Heinrich Boll Foundation and the Center for Sustainable Finance at SOAS called Debt Relief for a Green and Inclusive Recovery. And ahead of the African Climate Summit in Nairobi a couple of weeks ago, we published a report called Africa's Inconvenient Truth. And the inconvenient truth, according to our analysis, is that there are 33 countries that really can't borrow at all in Africa right now. In fact, they need significant debt relief. There's only 12, 13 or so that have the borrowing space, but they've got to be very careful because we're living in a new normal now for what borrowing looks like and the cost of capital, especially in Africa. Africa has what's called a premium, their Africa premium. There might be countries that have the same credit rating that an African country has, but African countries have to pay more. Right now, many of the countries in Africa, on average, something like 9% is what the interest rate is going to be, and the average is somewhere in between. Some of them are upwards 11, 13%. That's radically different for private capital markets than it was up until 2019, where it was somewhere in between 6 and 8%. where the China Export-Import Bank was 2 to 3%, the China Development Bank 4 to 6, and World Bank, African Development Bank, and other forms were less than 2%. Now we're in a very different environment. According to our research here, it looks like the China Development Bank is up to 8 or 9%. And we haven't seen any checksum loans, but they'll obviously be a little bit lower than that because they blend with ministry finance to be a little bit more concessional. Now, the rule of thumb, as controversial as it is that you should not be borrowing at a rate that is relatively higher than your growth rate. And African countries, especially in sub-Saharan Africa, are predicted to grow, around 3% or less over the next few years. So borrowing over that when you're already close to the edge is irresponsible, and many countries just are going to be too cautious there. Just the ones that have the space. But there's 33 countries in the region that need significant debt relief. China just recently, for the first time, played a role in Zambia, where it actually reduced the net present value of the debt. China's been the leader, according to the Sice-Carey and Rhodium studies, in debt suspension, but this is the first indication of significant NPV reductions. It wasn't enough, but at least it's a start. We're going to need that across the whole region for the pull side, as we call it in our push and pull framework, to be able to really step in and meet some of their needs. This is a drastic and urgent thing that needs to happen. These countries can't move forward without significant debt relief for those countries that can't borrow anymore, and significant effort to reduce the cost of capital for those countries that can. And this is what African leader after African leader said very, very loudly at the African Climate Summit a few weeks ago.
Thanks. And before we go to an open Q&A time, I have one more question for each of you about this new pivot on China's part towards small or beautiful lending, towards smaller scale projects, more targeted projects. Before we go to the open Q&A, I'd like to ask each of you to quickly weigh in on whether you think the era of large scale Chinese lending in Africa is officially over, or might this be a time of recalibration where each party considers the portfolio of projects and makes adjustments? Thank you.
Yeah, I think from our viewpoint, we do expect that Chinese lending will rebound because of African demands for financing. But this rebound will not be to previous levels that we've seen before. And as I mentioned before, trends show that loan averages and loan counts have declined over time. And there has been this policy framing, as has been mentioned multiple times, about approach to smaller projects or financing in smaller amounts. So we think all of this together tells us about the future of large scale lending. We don't think it'll completely disappear, rather that it will look different. And so we don't think it'll disappear because energy projects are still large in scale. So are transportation projects, and these are needs that continue to be on the African, coming from the African government side. However, it may be that for these large scale projects, there could be multiple Chinese lenders coming in on projects to provide smaller portions of the financing, as well as co-financing with other regional institutions and potentially multilateral development banks as well. So I think that's what I would say there.
Yeah, I wouldn't add much more, except to say, let's just take a second and say that being at around the same level of the African Development Bank is not very small. It's just that relative to 2016, when it was more than the World Bank, we probably aren't going back to that for a while, but it really remains to be seen, because there's so many of these push and pull factors are deeply ingrained, and on the push end, China's not going to get over that hump on its end anytime soon, and unless the global community works on the debt distress in Africa, we won't see those underlying conditions. So we don't really have the counterfactual yet. I think one driver that we didn't mention, that we've talked about in other policy briefs, that has been confirmed in statistical analysis and in our interviews, is first, it's always important to remember that these loans are dollar denominated largely, and therefore a big function, perhaps one of the biggest push factors is the amount of dollars that they have. And in those big surge years, China had a current account surplus of around 10%. It got really, really low for a while around the same time when there was a big lockdown. So those two things together played a big role in not having many loans. What's interesting now, though, it's not back to 10%, but China's running a significant surplus again. So the money's there. The policy isn't there. They've officially switched to small is beautiful, but they still have these mounting debt problems at home, and some security concerns about noting how reserves were in the middle of the Russian invasion of Ukraine. And so there's real timidity on the China side, even though the dollars are back. And of course, as I just said, we got 33 countries that can't, and 12 or 13 that probably shouldn't at these interest rates. And so before we can't see any significant movement until those two sides are unlocked. And as urgent as it is on each side, it's not going to happen overnight.
Well, thanks. We'll shift to the Q&A period now. We've got one round of questions that's come into the Q&A box already. So I'll start with that. And to all of our participants, if you have a question, this is your last chance to add it to the box if we have time for a second round. So go ahead. The first question, so I'll give both one round of questions, one question for each of you that's come in on the Q&A box, and we'll see if we have time for a second round. The first question is from Zara Albright, a predoctoral research fellow here at the GDP Center and PhD candidate in international relations at the Pardee School, for Tarella. And this question involves diversification among lenders. So one thing that's interesting that you mentioned about the Chinese Loans to Africa database is that it tracks not just CDB and Checksum, but it also tracks commercial banks, and it tracks including contractor credits. What trends do you see in different creditors taking larger or smaller roles? And how do you see this being different from other regions in the world, the varying importance of different lenders? And a question for Kevin, let me bring it up. A question from Amanfo Smart Edward, who's a Ghanaian and private researcher at the Seihai English Academy in Japan, wants to know if there's GDP Center research on the impacts and outcomes of Chinese lending. And since you oversee all of the work streams at the GDP Center, Kevin, I'd love it if you could spend a few minutes briefly touching base on outcomes and impacts. Thank you. Over to you, Tarella.
Yeah, and in terms of the diversification of the different lenders, I think one of the things that we saw is that there were several contractors that were involved in providing financing in this round, and then also the Bank of China that was involved in providing financing in 2021 and 2022. But something that we mentioned in the policy brief briefly is the fact that we did see other banks, state-owned commercial banks such as ICBC and Bank of China, be involved in syndicated loans to regional institutions primarily, but for other projects. And most of these syndicated loans were with other international banks. They were over $1 billion, and then most of them had over 10 banks, on the project. One of them had 22 banks on the project to provide the syndicated loan. And so at least what we're seeing from the state-owned commercial bank side is that they've really pulled back and seem to be, in some cases, co-financing with other international banks on these large-scale projects. And then in terms of contractors, they continue to lend, but for amounts that are under 100 million and in some cases under 50 million, which makes sense for them. Compared to other regions, I know Rebecca mentioned, our other database, the CODF database that looks at CDB and Checksum lending. across the globe. And as she mentioned, I think for those two lenders, the decrease is happening in that region as well, but not so much in the Asia region. Unfortunately, we don't have information on other commercial lenders for those regions, but I think it makes sense that we would expect to see similar trends, at least in Latin America and the Caribbean, for state-owned commercial banks, and then maybe less so in the Asia region, where they have more experience and are interacting with economies that can take on more commercial debt.
Yeah, just to piggyback on Tarella's on the difference, I think one thing, Zara, and thanks for beaming in, is you see in Africa on terms of development finance more of an emphasis on the Export-Import Bank of China than you do the China Development Bank in other parts of the developing world. And as I mentioned earlier, that's largely because the majority of checksum loans to sovereign states are blended to be somewhat concessional. So there's a grant element that brings down the interest rate. And obviously so many of the sub-Saharan African countries are IDA countries and need that cut. And that's why you see them more prevalent over the 2022 period relative to comparing it in other parts of the world. Amanfo, thank you for your question about the kind of research that we do. Yeah, across the Global China Initiative that we have here at the center, we basically focus on three things. This is just one part. One is the trends, right? We want to get a real clear idea of what the trends are, and that's why we have these 5 different databases. 2, what are the determinants? And you ask about qualitative and quantitative research. So we've done econometric analysis on what the trends are, but we also talk to a lot of folks and do qualitative work both on the ground in country and talking to folks in China. And then 3, outcomes. And we've done a lot of quantitative and qualitative work on the outcomes of Chinese overseas finance, on the impacts on climate change, the impacts on biodiversity and indigenous lands, the impacts on participation by local communities, the impacts on infrastructure bottlenecks and so forth. So I encourage you you can see it in English and a good deal of it in Chinese, to go to our webpage and just look at the Global China Initiative and click on publications, and you'll see a whole bunch of stuff on trends, determinants, and outcomes. Thanks for your question.
Thanks for that. With about 5 minutes left, I want to ask our panelists to share their final remarks on the state of Chinese lending to Africa. Kevin, could you start us off?
Well, thanks everyone for coming, and it's we continue to take pride in this service and in this particular database that we inherited from the SICE Carey group at Johns Hopkins that continues to do great research on some of the determinants and outcomes on this. This investment in many ways is another way to think about it in terms of these loans has had significant benefits for the African region. It's plugged infrastructure gaps. It's associated with economic growth, but it's also accentuated some risks. It's accentuated debt distress, didn't cause debt distress. That's from much larger factors than what China could impact. It's also accentuated climate change, air pollution, and biodiversity. So it's important for China and for African countries alike to do everything they can to maximize those benefits and minimize those risks, especially given the overall volume of finances starting to get at a new level. Thanks everyone for coming.
Yes, I just also want to thank everyone for coming as well, as Kevin said. And it's really been a great discussion, and thank you all for your questions. I think from my viewpoint, the lending relationship between China and African governments has played such a huge role in really strengthening the relationships over the years. Since Chinese lending has began and started to increase, we have seen an increase almost almost 100-fold in trade over the years. So a lot more economic integration and diplomatic engagement as well. And so since lending has played such a crucial relationship in the relationship, it's still here to stay. It just, I think, is going to look different in coming years. And other parts of the relationship, I think, will continue to be emphasized, as I mentioned, trade, agriculture, and various types of diplomatic engagement, where China has really been at the forefront of really standing behind some of the goals that African governments have for being grafted in and more prominent participants on the international diplomatic stage, such as being a part of the G20 and contributing more in other multilateral platforms as well. So I think this is just an exciting area of research that we'll continue to track, and we look forward to providing a new update within the next year or so on the newest year of trends and what we see in terms of context for those trends. Thank you again.
Well, thank you, Tarella and Kevin, for sharing your thoughts with us today. And thank you to everyone who joined this discussion. This webinar has been recorded on YouTube, and we'll share that link in the chat. To receive news of our future publications and events, you can subscribe to receive updates from our Global China Initiative, and you can find that link in the chat as well. Thanks all, and see you next time.